So yeah, so thanks for coming, guys. This is our HELOC Heroes. That's what we're known around the office for. So
Actually, it's
HELOC,
Batman and Robin. Just don't tell anybody.
awesome. Okay, guys, and just one more thing here as we're getting started. Just wanted to make sure, okay, for anybody on here that is an approved client with us, you'll be receiving white label marketing. The way to do that is to get signed up with us. So at the end of this, we'll make sure anybody who's not signed up with us can go ahead and get a broker package link to send this out. So awesome. So let's get started here. All right. Okay, so here are a few of the slides we'll be going over today. We'll just be going over some of the things that we're seeing and talk a little bit about HELOCs, talk about some scenarios, some sort of scenarios that your clients might be seeing out there, your borrowers might be seeing, a little bit of marketing, some of the marketing pieces that you will be privy to if you're signed up with us, and the ability to tailor some of the marketing efforts and kind of send those out to your team. And then we'll wrap it up with some questions at the end here. Okay. So you want to take it from here?
Well, I just want to make sure. I don't want to read anything verbatim. You guys can do that yourselves, but I do want to make sure that, for those out there, we all know that with the industry having the recent all-time lows, right? And clients are sitting on their 275s and whatnot. There's still a ton of equity to be tapped. And what we also know is that there is a ton of debt in the United States. I mean, we're talking about an all-time high. And I want you guys to know, I'm going to kind of wing off this a little bit, that I spent 20 years doing exactly what you guys are doing every day, grinding it out, finding out what's going on and how do we get loans, right? Regardless of the inventory out there. Look, I'm telling you right now, people are in debt. It's consumer debt's at an all-time high. I mean, we're talking the average client has minimal savings and they're just drowning in debt. The idea is to make sure you're always, always, always looking to help secure get their credit report, right? The bottom line is that's when you're going to know, because people are not going to tell you, I want to pull out money. But so we know that equity is increasing, unlike, some of the news out there that we're hearing from some of these folks that, maybe Mississippi, the values are going down, but I guarantee you here in Arizona, my house is still increasing in value. California, Florida, there's a ton of states out there where we're seeing a ton of appreciation. And for the majority, I think that's probably the case. So we know that home buying activity has slowed down considerably, but we're starting to see at least a good trend upwards. So I just want folks to remember, though, the HELOCs are a big way to get you still continuing to get originating loans, making money. Let's stop the attrition. Let's start making money, and let's stop worrying about all the other stuff, right? So bottom line is, I would always suggest that when you're helping folks, I'm always going to pitch. I was a refi guy. That's who I was. Hit top 1% doing it, right? Bottom line is, I'm always pitching a cash out refi. Always going to do it, right? Does it make more sense? And if not, some people just can't let go of that 275. They like talking to their neighbor, bragging about that 275, even though they're poor as hell. Let's just make sure that we stay focused. You're pitching that cash out refi, but guess what? Your backup plan, you've got a HELOC now. Now we've got the opportunity to tap into that and help them, pay off some debt, and they're going to save a ton of money doing it, right? So we've just rolled this out, but I'm sure everybody already knows what a HELOC is. So it's a way to tap into your equity. You only pay on the amount you're borrowing, right? So, and unlike your traditional, what most people think the HELOCs are, I myself have one right now. Went and built a pool like a dummy when the market is at all-time high and spent all my money. Bottom line is, so our HELOCs are very similar, but the great thing here is they can qualify with alternative documentation. So unlike your typical, ours is a 3 to 5 year draw, right? And then you're going to have the remainder to repay. So all of them, like all HELOCs, they're based on prime rate plus whatever their margin is, and their margin could be calculated based on their overall scenario or your LLPAs that you've added in. So moving on. All right. So the flexibility, obviously, so simply put, it's a line of credit, right? It's like a credit card. So that's how they're gonna be able to utilize it. Um, and the great thing is with the initial um, start, we're going to be IO period for the first 10 years on this. And it just gives them the opportunity to be able to utilize that money and pay it off, right? Um, and there are some caveats again. So, um, what I will say this though, let's just make sure that they understand what they're getting into, and I want to make sure that you understand every detail of these loans. Let's move on real quick. They can read that kind of stuff. So here's the cool thing. Most of your borrowers out there, or excuse me, most of our competitors will only go down to a 700. Obviously, they'll drop to a 75K line of credit. We go from 75 to 500 right now. The maximum total financing is limited to 5 mil. But if you look on this, and I want you to see that 90% owner occupied, that's CLTV. 90% is a lot of dang money, right? So it's an opportunity to help you guys be able to utilize that equity. So say it is in a lower state like your Mississippi's, right? Um, yeah, even though I wouldn't suggest that. All I'm saying is 90% gives you the opportunity to then be able to utilize or access all of that equity they have so they can then start paying down debt, right? So their initial draw, they have to pull out a minimum of 50%. Now, all HELOCs across the country is going to make you pull out something initially. The traditional one, mine made me pay, I think, minimum of 10 grand. This is 50% of the line. So that's a big caveat that you guys need to understand. And then after that, the first initial 90 days, they cannot access those funds until after that 91st day. Okay. So maximum DTI on these are going to be based at 50%. Okay. Now that's if a FICO is at 700. Otherwise, they're going to have to be at 45% max DTI on the back. There's no exceptions on these seconds. So these are going to be underwritten. And I want you to understand that when we put these together, it's a clean 1003, making sure you have everything dialed in, and we're here to help. But understand that you have a 50% max DTI. We cannot exceed that. So we will accept full doc, single doc, or 1 year tax return, and or 12 and 24 months bank statements. There's no CPA P&Ls allowed on this. No other any other kind of alternate documentation. Okay. So, and if there is a early prepay, and that's only for the first 12 months, it is a 5% penalty. And that's going to be on the entire balance that we initiated. So if there's $100,000 loan, it's going to be 5% of that 100 grand if they pay it off in the first 12 months. So, right, let's move on.
Cool.
Or terminated the loan. So all we want to do is talk about a few scenarios. And again, I want to get into this so we can open up the question and answer, because I know there's going to be a ton of them out there. So let's move on with
Yeah.
the
And
advantages of the
these are
HELOCs.
just quick here too. These scenarios, we talked to some of our marketing team here and they surveyed some of the LOs they've been talking to that work with us on a regular basis. So
And these are you're going to run into these scenarios, right? I mean, it's making sure you're engaging with your client up front. You know your clients. I mean, that's the best place to start, anyways. But knowing your client, hey, I got a kid that's now a junior in high school. Guess what? You need to start talking to him about, what's the plans for college education, right? How are you going to help your kid? Or maybe you've got that person that either has never invested and they're trying to figure out how they're going to make money in the future, talking to them about maybe buying an investment property. This is a great way to have that money or pay down their debt so they can then start saving enough money to be able to jump on something like this. And obviously, like mine, the reno, right? Tear out your backyard and you're gonna spend 200 and something $1,000 on a brand new, dream backyard. And yeah, the thing better start feeding me. Bottom line though is everybody has something, right? They want to improve their home, they want to build a pool, they want to whatever it is. This is a great way to get started, right? So it's just making sure that you know your client and engaging them and asking them the right questions. I do believe that, right? But the first thing is making sure that you're always, especially when it's a past client, is doing a simple, credit review. That was the easiest thing that I've done. It made me money year over year over year. and those that I've managed in the past in that in the retail industry, whether it was one team or multiple teams, as I moved up, the bottom line is making sure that you do that credit review and let them know, right? Because that is the way you're going to know, does this borrower need your help, right? And again, we're going to start with the full refi. That's just common sense sometimes, because sometimes it makes more sense to do that. Your HELOCs are not going to be the days of old when they were at 3 and 4%. I mean, prime rates and over 8 right now. So, and it's going to adjust every month, like any other HELOC will. And everything is depending on where prime ends up, right? So, right now, mine's jumped considerably, just like everybody else's. So, anyways, so the great thing is benefits conclusions. Obviously with a HELOC versus a fixed, you've got access to funds. Again, 50% initial draw, right? After the first 90 days, they then will be able to access and utilize or take more money out of that. So I do believe our rates are very competitive based on the options we have. No one out there, there's not an A paper lender or anybody out there that accesses 90% CLTV. And if they do, I'm going to guarantee you that our rates are super competitive compared to theirs, because we've shopped everybody. And obviously with us being able to go down to a 660 FICO, and heck, for a self-employed borrower that can't prove his income, guess what, Mr. Borrower? 12 months or 24 months bank statements. So I want you to know, though, the big thing when we're doing that, and stay right here for a sec. So I want to recap on that, because it's one important item. When you're doing bank statements, if there is declining income and we're using 12 months, we're going to use that decline, the most recent 6 months, as the income to qualify them. Okay. And when we're qualifying them, if the rate is not locked, we're going to qualify them at the float rate plus 2% on an amortized loan on these things. Okay. And again, max back end is 50%. I'll get into a little bit more on that later, but I'm sure there's going to be some questions. But I do want to make sure the benefits, obviously, we know the rates are competitive. We know there's flexible access to get this, right? It's a revolving line, so these folks have all kinds of options. They don't got to take every dollar up front. But the great thing is there's also tax deductibility, like as in any mortgage. But I always refer to them like, look, I'm not an accountant nor a tax advisor. I'm going to ask that you speak to your CPA about that, right? But anyways, let's move on. What? So again, client education, and first, I think is all of us being able to learn this product as we go, right? Now we've all had our nose in these guidelines for a couple weeks, and they're not tough, right? We've already got a few of them in, moving along, and they're smooth as silk. But I want to make sure everybody understands as we go, and as you have questions, that whether it's if I'm your AE, great. Email us, let us know. If you have already an AE here, make sure you're reaching out to them for whether it's the updated matrix or rate sheets or whatever it is. But for those that haven't signed up, you're more than welcome to reach out to Michael and I. Again, so let's make sure that we educate our clients effectively, and I'm making sure that, though, as we adapt marketing strategies, right? So what we're trying to say here is you can tailor your own personal marketing around this, and we're going to have white label marketing for you guys, right? But I want to make sure that, again, it's something that you're always mentioning, and when if you're targeting a certain audience, what I would do first is start with your current client base. Whenever someone's struggling, that's the best way to go. Start from client one, and it's just touching base with them. How's life? Do you have any referrals, right? And I think that's the biggest question. It's just whenever you hear of anybody, I don't care if it's in the workplace, your friend, your neighbor, I don't care. Someone you hate, send them to me. So just remember, it's ask for the business, because you're not going to get it without asking. So let's move on. They already know all this.
Kind of what you
Tap
just
into your client relationships, right? So there's multiple ways to be able to do this, but I mean, and we're just trying to give you some examples, and you guys already know your current client base is probably key. After that, I know that you guys got some people do online leads, some people do direct marketing or direct mail, and there's multiple ways to do it. And your referral partners are huge, right? So for those of us who have those realtor relationships, CPAs, divorce attorneys, um, that's where I got a lot of my business. I actually had a ton of divorce attorneys in my pocket. I'm glad I had them too later on. I needed them. Um, just kidding. But what I want to say is there's all kinds of ways to get out there and do that. And it's just, look, the clients are on the phone, pick up the phone or in person if that's what you prefer, but get on the phone and just have a good conversation with them. And that's really what you're doing. When you're tapping into any kind of market, especially when you're looking at helping somebody consolidate debt, think about it though. 61% of the average American homeowner today is drowning in debt. 61%. These include people that make $100,000+ a year. They're living paycheck to paycheck. They have an average of, I believe it was just under $6,000 in savings, right? And the way that they feel like they're, I'm gonna say investing, they have a 401k at work. That's not investing, guys. You guys know this. I know it. It's not investing, right? It's something you should do because your company's matching your money. Um, uh, it's just something everybody should do. So it's having that real conversation with a client. You're 43 years old. You're not investing your money. You're drowning in debt, right? You can see on their credit, again, the most important thing is getting credit report. You can see they're making their minimum payments. And we already know you make minimum payments on even a $2,700 credit card. It's going to take you 17, 18 years to pay it off if you made minimum. So it's having that real conversation, compounding versus simple interest, right? So the cool thing with a HELOC, I've had a couple in my lifetime. Use it as you need it, and then when you know, I mean, on great months when you get that extra bonus or whatever it is, pay extra. You can knock that thing out in no time. It's not that difficult. So, and I think having the right conversation, but it's education, right? Educate your clients. All right. So frequently asked questions. So there's gonna be a lot of stuff on here that you guys might already be kind of thinking of. So is it variable? Yes, all HELOCs are, and this one is as well. It's gonna be based again on prime rate, right? Plus the margin, which is all of the LLPAs or ads that we'll have, which I'll have on a rate sheet. And it's pretty easy to calculate. Uh, other than that, so what is the index? How do you explain it? Right. So right there, I'm not going to read this verbatim. The margins there, which I've discussed a few times. How do you explain the floor rate? Every HELOC has a floor. Every arm has a floor, if you will, right? So with ours, our highest rate is at 18. I think our lowest is 4%, if I'm not mistaken there. How often can the rate change? It can change every month, right? For those of us that were swinging these loans back in the day when Bush was in office and it went up, I believe it was like 22, 23 times every month in a row. And people were scrambling to get out of HELOCs trying to get into a fixed second, right? So, and as we all know, fixed seconds are typically a little higher than your HELOC. But I'm going to talk about that in a second because we do have that option as well. And they're actually aggressively priced on our fixed seconds, but off that. So how often can the payment change? Again, obviously that could be monthly, but I want you to make sure that we do have two different ways for them to have a draw period, which is 3 or 5 year. And again, that will be explained a little bit more in detail on your matrices and your rate sheet, but I'll show it here. Let's see, is the borrower's payment going towards principal? No, I would say throughout the draw period, if they make the minimum interest only payment, no, it's not. It's interest only, right? So I had that conversation with them that you're making the interest only. I always advise making extra, right? Maybe it's after the job completion like mine. I didn't make extra payments on my IO, right? I drew what I needed. Um, and once I'm done or completed with my construction, now I'm starting to make the IO and I'm dumping extra money as I go, right? I'm borrowing money from Mikey to do that. So, or I've got a fund. I'll send you guys. I'm gonna go fund my pool. Help me, Lord. All right. So if the principal is being reduced, how long is the interest only period? So right here, we've got interest only period typically spans 2 to 5 years. During this timeline, credit can be reused as it's paid down, right? So each month's minimum payment covering only the interest. So basically, The payment will fluctuate as they borrow, as they borrow and or pay extra principal. Your payment can adjust lower, but if the prime rate tip wants to go up again, which I don't think that's the case right now, but if it does, right, the rate can go up, and that's a good conversation to have with the borrower. And I've already discussed how long drop period is, so let's move on. All right, when the drop period ends, everybody knows. So they now have which is cool because your average HELOC in the US for, let's say an A paper, it's 15-year draw or 10-year draw, 15-year payback, right? So we have here a 25-year repayment schedule. So basically what we're saying is it's an easier way to qualify the borrower because we're basing it on a 30-year AM. The payment's going to be lower in case, who knows, right? They maxed it out. Now they're making minimums. All of a sudden, now it's recasting. They have a 25-year payback. It's going to, life will be okay, right? So, can they extend it? So I think that's basically what good loan officers do, right? And for those of you that are new, and for us old dogs that's done it forever, staying in touch with your borrowers, not just doing it when you go, well, I know he only took a 3-year draw. I'm going to call him in 3 years. No, every 6 months you should be talking to your old clients. I mean, that's just who I was. They knew I was going to reach out to them, whether it was via email because they were always busy and it was hard to get a hold of them. But it was just making sure that we had that commonality because we all know that having that niche with that client up front, they like you or they don't. And if they like you, they'll communicate with you for the rest of their lives. I mean, it's just something you should be doing, right? And then it's an easier way to get in instead of them being embarrassed that they went and maxed out all the credit cards that you just helped them pay off a year and a half ago. True story, it's happened to me multiple times. And they're too embarrassed to call you back because you've kind of helped them, you've guided them, you told them how to invest now, start paying themselves first, all that fun stuff. It's staying in touch with them, right? Making sure that they know you're there. Anyways, how often can we draw against the line? Okay, so once the 90-day blackout window for the servicing transfer is passed, they can make withdrawals at any time, and it's a minimum of 1,000 per draw, right? They can't go borrow $5 to go eat McDonald's. Well, McDonald's is 20 now. And I love McDonald's, I ain't gonna lie. All right, so how they access the line is pretty simple. The blackout period, so that first initial 90 days, just so you know why, it's because of the servicing transfer. Like we know, most mortgages are backed by an investor, if you will. And we need up to 90 days to make sure this is all done. They have everything set up for the client. They'll be contacted by that servicer, and they'll be set up on how they can withdraw, whether it's doing it online like most do, by little checks. If people still do that, I don't know. Do I have to take a draw at closing? Yes, again. So every is 50% of the loan or line or 75,000, right? Minimum draw is 75,000. What else? Business use, that's easy. All right. I'm just trying to make sure that I go over anything that's and so how do you get paid? There's biggie. So compensation points linked to initial draw. So i.e. the initial draw is how we always got paid when we were selling HELOCs back in the day. And for those that just want to open up a line, I mean, you know what? You did it for customer service, but you're I don't know, you're not happy. So bottom line is, if they're taking a 50%, if it's 250 grand that they initially pull because they're going to go do whatever, great. Hey, that's how you're going to get paid. So if you're charging 2.5%, you're getting paid 2.5% based on the amount of the initial draw. So always remember that. It's the most important thing out there, right? And they have to pull something. So, okay. Moving on.
Yeah.
All right. The alternative, which is super easy, is just our fixed second, right? And I did want to make sure that I got back into that for those that don't know already, right? We have fixed second options. And look, sometimes it is a better way to go for some clients. HELOCs are a better way for others, right? Um, there's the only difference is if you borrow 250,000 on a second, that's the amount of money they're going to get out at whatever it is, right? At close minus all the closing costs. So these are a great product. We've been seeing an influx of these coming in. I would just always, I always like to mention though, those extremely low ones, right? 75 grand. Be aware that it can always be a possible high cost in certain states. There's always a way to fix it, but you know, typically it's not up to you or I. It's basically up to that state and our compliance if we get it done. But I just like to make sure everybody's aware of that, right? So 75, if you can, let's move them up. Helpful for you. So our fixed second matrix right here in front of you, as you can see, unlike the HELOC, you're not getting 90% across the board. So our investments will cap you out at 80. You can get 90 on a 740. However, on a HELOC, you can have a much lower credit score and still get 90 CLTV, right? So something to be aware of. We still go down to a 660 there. Little higher though on the lower FICO on the fixed second. So something to be aware of. So if you don't have a 700 plus FICO, maybe the fixed second is the better way to go here, right? You have higher LTV um, coming that you can help or utilize here. So on the fixed second versus the HELOC though, one caveat I want to make sure I'm going to explain appraisal requirements. So on your HELOC for lines under 250, they can do basically a drive-by. They also will do some for over 250. We need a full inspection for HELOC. All six fixed seconds, I'm getting tongue twisted. Fixed seconds require an appraisal. If you have one that's recently done, and I believe if it's under 90 days old, on the HELOC, we can do a recert of value as well as I believe the second also allows this, but we want to make sure we can use that current appraisal. Okay. Not one that the client went and ordered from Billy Bob next door. HVCC has to be ordered through an AMC. Okay. So, and if it's not, still bring it to us. Let us know. There may be a way to do it, but again, it's got to be ordered through at least a lender, right? I mean, we can't have, like I said, Billy Joe order it through Sally Bob or whoever. Let's move it on. Pros and cons.
Cool. Yeah, so this is basically just this is just how we're gonna sum this up for a second mortgage. The pros on this, you have a fixed interest rate. There's a 30-year fixed. It's a predictable payment that you'll be able to see, unlike the HELOC, which will be able to, fluctuate. It's a revolving line of credit, so those will fluctuate from month to month. It can. So that's the biggest thing there. Some of the cons with the second mortgage, I know we've done a lot of these second mortgages, and I think you would agree that they're a little bit more strict. It's not always an easy loan, so that's definitely one of the big things there, the higher
Be,
closing costs.
be aware that's look, none of these are Fannie Mae. We're not, you know, we're not a government agency underwriting certain guidelines, right? These are all manual underwrites. Your first lien, they're going to be more susceptible for exceptions, whereas the seconds, right? They're in a position where, you know, they have a lot more to lose. A second lien investor, they're going to underwrite it very strict. You're not going to get exceptions for LTVs, DTIs, anything like that. Now, if you do have, there's one that I've seen, and that's higher loan amounts, as long as it makes sense, right? If you have a higher, maybe a higher value, and the borrower's trying to borrow more, do bring it to us. That's something that, as long as we qualify income wise and everything else, yeah, we've seen those go through. Lower than 75, nope. I'm just saying there's not anything else. There's just nothing like that. Clean 1003, making sure we've got everything dialed in. And again, our job, Michael and I, we like to review those, especially if you're uncomfortable with it and you think you want to make sure you want to, second set of eyes. Believe me, I'm going to be on it. Otherwise, if you're pretty confident it goes in, underwriting is going to have it out, in the next 30, within 36 hours or less. So, Just know these can be quick and easy and painless. It's just making sure when you structure a loan, you have everything on that Tunnel 3. Again, that's our Bible. And I can't stress that enough. I mean, now I sound like an old retail manager or VP telling an LO how to do this, but I became a better LO because I had cleaner Tunnel 3s, right? And making sure you have that's the backstory, right? If you have that dialed in, and if there's any caveat, hell, write a letter to the underwriter and we'll accept it. And I'll make sure our underwriter reads it and gets it, and they'll love you to death, right? It'll make your file go quicker. So I'd rather have 2 conditions than 20, and I'm sure you would. But I wanted to run through this a little quicker because I do want to open it up to a few questions. And I want to make sure that I even busted out the matrix because it's officially finalized. We will have that posted on our website here shortly, which is nonqmexpert.com. There you can go and see everything about Oaktree, that we've been in business since 1989. We have pretty much every loan under the sun available to you, from fix and flip to second liens. I don't care what it is, right? And if you know our guidelines very well and you see on our matrix that your borrower may not qualify for the LTV that you need, bring it to your AE, to Michael or I. Look, we know there are things that we can do outside the box because we have multiple investors that allow, they have appetites for certain things that others won't, right? So I want to make sure that you're always, always, always bringing those to us. And any fallout anywhere else, you know what? The majority of the nice referral letters that we've received on our team, because we've had fallout, multitude of other lenders, they bring it to me. And believe me, if there's a way, I will turn every stone to help you find the loan. I will get you paid. All right. That's the bottom line. So these HELOCs are going to be something really good. It gives you that, as we used to say in the military, right? You never want to go into battle without all the ammunition you have, or that you can, right? I want to make sure that I've got explosives as well as my rounds, and I want to make sure I've got my 45 and my my A6 like ready to go, right? Rangers don't go into battle unscathed, right? So we're gonna have whatever it takes. This HELOC, our fixed seconds, are a way or means for you to make that extra money and start getting more clients involved. If you can't talk them out of a 275, maybe it is a better scenario. You can save them $1,000 a month on that. I don't care what the 275 is, right? $1,000 a month is $1,000 a month. Educate your borrower. Now, if they can't get rid of it and they're going to hold on to it tight, it's like we used to say, hold the rope in the military. They're holding on to that rope. They're not letting go. You've got a backup plan. You've got a HELOC. It's an amazing product. It gives you an interest-only draw. It's just like a credit card, and they can pay it back as they go. And hey, if they need it again, before the draw period expires, let's open them up again. We can do it again. So, and I want to make sure that, again, if there's anything that you don't understand on these, let's get after it. So,
Awesome.
what kind of questions you got?
To confirm, there is an EPO if the initial draw is paid back, question mark, or is this penalty assessed to the borrower?
So, okay, there's an EPO on any loan. So, let's just say that if anything's paid off in the first 6 months, I mean, 6 monthly payments, right? That is the key. I've yet to have one, don't plan on having it, and I'll make sure that, if I need to, I'll pick up a phone call and call your borrower myself, because that's not going to happen, right? I mean, I just want to make sure you guys know we got you back. But yes, within 6 months, it is the broker and our responsibility, because we don't get paid if we get an EPO. But bottom line is, um, the borrower, within the first 12 months of that HELOC, right? If it's paid off early or they close it, there's a 5% penalty, and it'll be based on I believe the maximum amount that's borrowed. So if it's 100K HELOC, they're going to pay 5%.
Is their appraisal or is it AVM?
So again, on the HELOC, AVM is basically it's a drive-by, but it is under 250. anything over 250 loan will be a full appraisal. And again, if you've done one recently, um, um, we can use that appraisal. Anything else?
Yep. If they have to take 50% at closing, but they do not need the funds immediately, at what point can they return the unused funds? After 90 days or once a loan
Yeah,
is
I'm going to say that would be after 90 days.
Yeah,
So basically, the loan's being, uh, it's in that servicing phase, right? Being transferred to a servicer. Just make sure that they understand that first 90 days is going to be kind of a little goofy, but
yeah,
that that's what it is. 90 days, and we extended that extra 30 days because some investors, as we already know, right? I've had my loan sold a multitude of times on a first, and it's kind of a pain, but we've added that extra 30 days to make sure the borrower is okay. There's not going to be any issues. So 90 days, yes.
cool.
Or they can send it to us and we can all go party in maybe Hawaii or something. I could use vacation.
You look like you're ready for it with that shirt.
Oh,
Who are the investors for the HELOCs? These are our private investors.
they're just private investors. I mean, um, I don't know. We'll call them Bob and one Sue. Okay, there you go.
We like them both equally. I hope it wasn't asked, but how long on average does it take to close a HELOC? Separately, how long for the second mortgage?
There's not a loan. There's not a loan one that should take over 30 days. I don't care if it's look, for those of you who've done manual VA and FHA in your lives, those are harder than any non-QM loan. What I see um, is sometimes people, we get that euphoria. We're all human. I've done it, right? Oh, my pipeline is huge. I've got, 88 loans in my pipeline. I'm going to make, $1 million this year, whatever. No, like, look, it's making sure upfront you set expectations with your borrower. They understand that when Mikey calls, Mr. Borrower, hey, we got your approval. I just want to go over a couple things. I need this from you, and they know they got to get it to you that same night or within 24 hours. I told them I needed it that day or by the next morning. I walked in, I needed to have it on me, and if I didn't have it, I blew them up. And I think we've gotten away from that a little bit. There are people I mean, I've seen first lien loans now. My record, our record as a team, 4 days, front to finish, sub to fund. 4 days. I've had a jumbo, two appraisals. Now, that's saying the appraisals were quick and whatever. It doesn't always work that way. 8 days, sub to fund. I'll mention her name, Mary. I mean, she was just a stud. 8 days, sub to fund. A manual underwrite. UWM can't touch that, right? I don't care. I've slung loans with UWM guys, so I'm not talking smack. What I'm saying is those are turn times that you have a cert, right? You have a DU approved eligible, and it tells me get this, and they close it in 4 to 5 days. Everybody's bragging. I could do manuals in those days. It's not up to me. It's more up to you. So
Yeah,
just know we will be consistent as we can on our turn times. Nobody can guarantee anything. There's always an issue, and I'm not going to promise anything. What I do say is right now our average is 36 hours or less. We were running at 24. We've increased our ops staff, which is a great thing, but they're cranking them out, right? So if you get it, typically Micro I is going to review that first initial approval with you, and our AM, she steps on throat. She gets your loan done, right? You get the conditions from your client and the simple title items and whatnot, as fast as you can get them in is as fast as we can close. So I don't have extensions on rates for a reason, right? We just get them done, right? And then Michael, I will probably bug you like a client if we don't see conditions moving in, and but we'll do what we can to help, right, guys? I mean, that's really what it's all about. One team, one drink.
awesome. I'm just thinking this is a question you might like. Do you have tips for upselling HELOCs? Some borrowers are afraid to take out more to avoid the full appraisal.
I Yes, I do, and I'm going to tell you right now, I ran into this my entire life. Um, it's that, and people have been that what's that taught not to call their house a piggy bank, because when the meltdown happened, right, it got really crazy, and we started seeing these kind of questions rolling in, and selling points and all that. And I'm telling you right now, I I was trained initially, thank God, because that's why I survived and I was able to help train others to be successful as well. It's educating your borrower and making them understand it's only there for emergency purposes only, right? So say they have a 500,000 they can utilize. You want to talk them into it because they never know, right? 'Cause they're people, and you can say this all you want, but you're leveraging the one asset you have in life to help create wealth, right? There's going to be that investment opportunity maybe, and you're going to need 500,000. Well, you only took out 300. Now you're coming at me, and like they're going to lose that opportunity. Um, Whatever it may be. If they're cool, we thought I was going to spend 160,000. I spent 220, and I'm still not done, right? Uh, I am kind of so. But what I'm saying is, those are real life situations. They need to understand that you're not treating it like a piggy bank. You're leveraging the asset you have. Use that word. I learned that from millionaire borrowers when I was really young because it was making me mad. I made all this money, and how come I don't have wealth? I didn't, and I made more money than a lot of them. And they were like leverage, right? So you're leveraging that asset, but other people, and why I say it's so important to have that credit report, they're an accident away from bankruptcy. They literally are an accident away, right? You've got whether it's grandparents, oh sure, granddaughter and grandson, I'm gonna co-sign on your student loans. What's happened to student loans now, right? Like they're paying them. You're not extending those out. And the issue is if you look at their credit, people are using credit cards to pay bills. Yeah, let's go out and eat. Yeah, I got the money. They don't. They have a credit card, right? At the end of the month, the biggest thing I did to help me win and educate a client, calculate their income. People are conditioned, number one, as I said, not take all this money. They're also conditioned, oh, I make 60,000 a year. Oh, okay. 5 grand a month, great. At the very end of that call, I go, well, wait, now we've taken all your debt. Now let's look at your 60,000 a year, right? 5 grand a month. You're doing really well. Good for you. Been on the job 10 years. Great. Um, don't you pay taxes? I mean, unless Uncle Sam's your real uncle, right? Which he's still going to rob you because that's just what we do. So you're going to pay taxes. You also have insurance for you and your family, correct? So you're bringing home more like what, 3,800? Is that about right? Now calculate that, and I guarantee you, someone that's making 200 grand a year, do the same thing. If they have a lot of debt, I guarantee at the end of the month they're broke. So you got to do. And then I'm going to also say this, and I used to press this on my teams. The biggest thing that you can do when you're taking an application from a client, don't take them. Oh, DU says I only need a month of reserves, or get 1 month bank statement. Screw that. Ask them for every asset that they have. Why? It's this way to educate and sell your client. If they have zero investments, they are an accident away from bankruptcy. They are. They don't have any money. You gotta stop taking the minimum, dig in, and get everything you possibly can. If DU told me I needed a 1 year of tax returns, what did I ask my borrower for? 2. I submitted 1, but I had it just in case because if the underwriter asked me for anything, they had it right there. I never had to chase anything. So all I'm saying is expand your thought process when you're taking and open up. How can I sell my client? How can I educate them? No investments, no assets, right? At the end of the month, how much money do you have without using a credit card? Do you have any money? Are you investing? Are you paying yourself first? And then do you have any real estate, or just would you like to, everybody talks a big game. How are you going to do it, right? You need to start somewhere. You need to have the down payment, right? So maybe let's look at paying off all your debt, paying you first, start investing 25% of your money into simple mutual funds, right? Safe. And then start saving money, maybe buy an investment property. Anyways, moving on. I get really passionate about certain things, and God forbid, don't sell the client, right? It's finding out who they are, how they tick, and once you figure that out and get them to understand, some clients don't understand that first day. 40% of every refi I've sold ever do it the first day, right? 60% of the remaining 2 days to a month later, they come back. Oh, Sonny, you're right. Yeah, I know I am. And they're going to come back to you because you were real with them, you were honest with them, you engaged with them, and you made them realize that there there, there are ways to make money out there. Okay, so moving on.
Cool. And then, so Rosemary asked, I read that borrower could repay the line after 90 days, but keep it open, no penalty. Just want to be sure. Actually, I do believe she's right about that.
No, but can you keep it open? Yeah. I mean, what do you say? Okay. Oh, if you paid it down to zero, yeah, as long as it's open and you're not closing the account. No, there's no prepay.
Yeah. Okay, cool. Does anybody else have any more questions
And
here?
I'm sorry, I get a little sidetracked sometimes on these things, but I want you guys to realize that um, the sky's the limit out there. And granted, I'm no longer slinging loans or managing those that do, but I left when rates were at in the twos. I mean, I was done. It was my time to leave after 20 something years. Um, I really thought I was going to exit the business altogether. I turned down VP jobs, even a site director job, to come here and be an AE for some reason. I don't know. Someone talked me into it, and who it was the director at first, but ultimately, when I came back the third time, I think ownership, they don't provide lip service. And Oaktree is a company that's been in business since 1989. Our current ownership took over approximately 3 years ago and has changed Oaktree exponentially. Everything they've told me up front has come true or is being worked on, right? Um, and look, I'm one that I will say I left the other side. I was tired of lip service. Maybe I should have went and just became a broker, but I don't know. I knew for almost a year and a half I was leaving. And it was just finding my way. What was I going to do for a living, right? When I grew up, at my young self. All I can tell you is you can make it. I've trained people in the industry that are crushing it today. They crushed it last year. I have the number one LO at Nexa, um, and deal with some of the top 1% in the nation, and they're killing it. Why? They are not doing just purchases. They're doing 35 to 45% of their business is cash out refis because they understand Americans are in debt. We're stupid. They don't train us how to not be in debt. What do they tell us? Graduate high school, go to college, get a job, get married, have 2 kids, 2 dogs, and a couple cars and a house. Oh, we bought the house. We need to go fill it now. And we got a 5,000 square foot home. I'm just saying this because it happened to me and I was pulling my hair out of my head. Oh, let's build a pool, whatever. Look, I'm trying to say is, they are in debt. Don't take their word for it. Hey, how's life? Oh no, we're great. Yeah, everything's great. And I'm paying. Get their credit report. Don't care who they are.
Yeah.
You'll be surprised who you see who are the ones in debt, right? And they are drowning and they don't know any other way around it other than maybe putting a dollar or what's the lottery ticket? $2 every other Wednesday and Saturday to buy a lotto ticket and cross fingers every other night. Okay. What do we got?
Fixed seconds, do you need a full title policy?
Yeah, on a fixed second, yes. Yes, fixed second you do. HELOCs are a little different. Um, and I believe it's based on loan size as well. And I'm always going to tell everybody there's certain things that even though I will get you your answer every day, when it comes to certain anything that's more like the processor side, I'm a loan officer at heart and always will be. That's why I close a lot of loans and I don't have fallout. But bottom line is, I am the I am the dullest tool in that processing shed. Sometimes I will refer you to my account manager who has years and years and years of processing experience and a stud. And she will get us to the finish line. Okay, so again, I know a lot, but there are certain things that yeah, HOIs and we'll talk to my gal. We'll go from there.
Awesome, guys. Well, if there's no more questions in here, we do want to just say thank you again. This was
Look,
fantastic.
nonqmexpert.com.
Yep.
Broker sign up is there. Every matrix we have for everything except right now, the HELOCs will be added here shortly. The fixed seconds are on there now. And the other item is our fix and flip. Builder, ground up construction loans are not on there, right? Reach out to your AE if you do not have one. Please call Michael and I. You have our numbers. But fix and flip are huge. I just talked to a gentleman yesterday who has multiple builders who can't get financing because banks are pulling back. Guess what ours are doing? We're pushing forward. We're lending more. From my understanding, what people are telling us, better rates. And you're talking to a guy that's done a lot of loans, but I've never done those kind of loans. But call us when you need us. nonqmexpert.com. Email us, call us. We want to earn your business, right? We don't want to do this. I'll earn it. We'll get you paid.
Awesome. Awesome. Yeah, and please do reach out to us if you have any questions here. We sit next to each other, so we're always willing to hash stuff out if we don't know the answer. We got a ton of people around us that do know the answer. So once again, guys, want to say
I know
thank
everything.
you. But thanks again, and we look forward to hearing from you. Thanks, guys.
Thank you.